Here's what the metals are saying today, Friday, February 20th, 2026. Gold is at 50.25, extending a two-day gain. What is behind it? U.S.-Iran tensions are escalating. President Trump set a 10 to 15-day deadline on nuclear talks. The U.S. reported deployed its largest Middle East force since 2003 Iraq invasion, and markets do not ignore this. Fed policy is still split. January minutes from the Fed's open committee meeting showed division. Some see cuts later, some even floated hikes if inflation doesn't cool. Data says the labor market is still solid. Jobless claims fell 206,000, and that's resilience, not a recession. Today's focus is the PCE and the GDP numbers. Now, that's what can move the tape. Physical demand in Asia is muted because of the Lunar New Year, so there's very little liquidity. The bottom line is gold is slightly firmer, but is still set for a modest weekly loss or unchanged level. However, silver is close to $80 an ounce, its first weekly gain in 4 weeks. Support is coming from geopolitical tensions, thin Asia volume, and positioning ahead of this U.S. data that's supposed to be able to come today. Let's not forget, silver just went through a off rally and a historic sell-off, largely driven by speculative flows out of China. When liquidity is thin, the moves exaggerate. Fed's minutes is the same story as gold. Policymakers are split, inflation key is still a variable, and the market is basically balancing three things at once: geopolitical risks, a still strong U.S. economy, and a Fed that is not fully committed to cuts. This is not a panic setup, this is a volatility setup, and volatility is when metals start reminding people why they exist.